So if you are not thinking about cost reduction as a way to increase your profitability, it is time to change that. Hi there, Kelsey Toner here, the founder of Guest Focused Tour Business Coaching, where every day myself and our team of tour business mentors are helping you build a thriving, profitable tour business. Welcome to the next video in our series on maximizing your profits as a tour business owner. In these 8 videos, we're going to be sharing insider tips, best practices, and secrets from our coaches and members to help you have the most profitable business possible. In this video, we're going to be diving deep into cost control best practices and tactics for cost reduction, specifically for tour operators. In our earlier videos, we talked about increasing your profitability by increasing your top line revenue. This can be done by increasing your prices or using dynamic or variable pricing or increasing the average order value. But notice that profits is simply your total revenue minus your total costs. Meaning that if you can find a way to deliver the same type of guest experience, but at a reduced cost, you are also becoming more profitable. And notice that in theory, you don't have to touch your prices, you don't have to increase your top line revenue, as well as there's that similar compounding effect. If you can find a way to save $1,000 a month during your core season, well, that's going to be $1,000 a month after month after month. So if you are not thinking about cost reduction as a way to increase your profitability, it is time to change that. So let's have a look at 5 core best practices that can inspire you for cost cutting in your operations. First and foremost, let's talk about financial tracking and cost transparency. As a tour business owner, you really need to know what each dollar is doing for you to properly evaluate your costs. So it's important to regularly check where your money is going and assess where you might be able to save without compromising the guest experience, without compromising on your values, or ideally your financial goals. In the early days of a small business, setting up a system to track these expenses can be done inside of a spreadsheet. But very quickly, as a business owner, you're going to want to move to one of the small business accounting software solutions that are inexpensive and really powerful tools. Maximize that profitability. The key here is to be regularly looking at your expenses versus that kind of year-end assessment that many tour operators fall into, where we reflectively see where our money went instead of doing this on a month-to-month basis. That's why the next step in this process is to ultimately look into bookkeeping services and people that can help you with that financial and admin work of tracking and categorizing those costs, reconciling money that's coming in and coming out, and generating monthly reports for you so that you don't have to do it. The main reports that most small businesses should be looking at are your monthly profit and loss statement, a monthly balance sheet that gives you a quick snapshot of your liabilities and assets and where your money is at that moment of time. And the third one, for our purposes here today, is that general ledger. This is a review over the past month of all of those micro transactions, money in and money out. And ideally, through your booking software or your bookkeeper, you can have those transactions categorized so you can quickly see what you're spending on what. I want to take a moment to share some of the most common mistakes we see when we're working with tour and activity business owners on the properly accounting in their tour business. So they join the coaching program and we quickly notice that they're not actually tracking their credit card fees as an expense line. They're not maybe properly tracking their booking software fees or even commissions that they're paying to OTAs. And part of the reason is, well, hey, that money never hits my account. Why should I bother tracking that? I just want to track the revenue that we've actually received. Well, part of the reason is the spirit of this video. You want to accurately know how much am I paying in credit card fees. For example, you might consider switching to a different booking software because of their volume. They can get a lower credit card rate for you. You could potentially save an extra percentage of all direct sales that would be profit going direct to your business, assuming you kept the total price the same, what customers are willing to pay at this moment. The same thing goes for booking software. You want to be knowing what you're paying for your booking software. Companies love to say, oh, you don't pay anything for your booking software. That's your customers that are paying it. But that's probably because they don't want to draw your attention to that if you triple the size of your direct bookings or triple the size of your business, you've also tripled the cost of your booking software. That is when you might want to know if I'm paying $15,000 or $20,000 or $50,000 to my booking software. That might be an opportunity to recognize that this is not necessarily a fixed cost. Maybe we want to negotiate with that booking software to get a lower booking fee, which happens with many booking software companies. We also might want to consider switching to another booking software solution if it means we could save $10,000, $15,000, or $20,000 a year. Same sort of thing goes with those OTA commissions. If you're doing $1 million in sales through an OTA, that's $250,000 at a 25% commission that you're paying to get those customers. We want to know these expenses so we can make these tactical shifts and adjustments. So hopefully you're staying with me so far. The very first step is to make sure that you're regularly tracking this stuff and checking in. You gotta do this before any of the other strategies that we're about to dive into. So let's now focus on adopting technology to reduce costs. What you'll quickly see is that for most service businesses, labor is going to be one of your largest costs. That might be labor to facilitate the experience. It could be labor for people who are answering phones and emails, and a lot of admin work in terms of invoicing, processing payments, customer service, etc. So one of the easiest cost-cutting moves that you can make as a tour and activity operator is to use and leverage a modern booking software solution. This isn't just about making it easier for your customers to do business with you, to purchase from you online. That's one side of it. But here, I really want to focus on how this is going to help you reduce costs across your business. You'll be able to cut down on hours and hours of weekly admin chores. You're going to be able to handle and process invoicing and refunds that much more efficiently. You're going to be able to reduce your call volume and needing to respond to emails and going back and forth to check availability just to have any given sale. You can automate hundreds and hundreds of routine tasks. You can quickly generate reports that are going to allow you to see things like which of your tours is selling the best, which one is selling out, which ones are the most profitable. You can develop tour manifests to make it easier and less of an administrative burden to actually run the tours. In addition to managing resources, vehicles, assets, you could potentially have point of sale systems, check-ins, digital waivers, and more. So for most of you who I hope are already using booking software, you don't need to be convinced of this. But I candidly speak to a lot of tour business owners who have still not embraced this technology. What I want you to see is that very often tour business owners aren't properly tracking their own inputs to the tour business, especially if you're on the smaller end and you yourself are handling sales and customer service and you're answering the phones and you're doing a lot of behind the scenes work, but you're not actually capturing that cost in your bookkeeping. Then it's very easy to say, that seems like a high cost to have a software solution. What we're not seeing there is that while your business might appear profitable, you are not actually paying yourself the market rate. Imagine you take yourself out of that business, you need to hire somebody at the market rate or at whatever labor source you can find to get that work done. That work needs to be done in order for your business to run, and that should be captured as an expense. And so that's where it can sometimes be misleading, or it can feel like these tools are expensive. Now, we focus there a lot on booking software as a simple technology that's very, very cost effective. It's a way to reduce the labor costs in your organization. But this applies across lots of other things. Perhaps there's a guide scheduling software where you can manage their availability and scheduling in a way that saves you hours every week. Perhaps you have marketing automation tools or software and CRM that are going to make your lives easier and ultimately either allow your employees to be 2, 3, or some larger multiple times more productive with the same amount of payment, or you could potentially reduce that labor cost and get that same amount of work done. Both are going to make your business more profitable. A great example from one of our coaches who does a tremendous volume of corporate sales. And so they had a B2B system. They had 2 full-time employees who were working with all of these clients doing well over $1 million a year in sales. Now, when they looked at technological solutions to help them with invoicing, with deal flow, with tracking leads, with communicating back and forth with all the clientele, they quickly realized that with the help of HubSpot, they were able to be substantially more productive. So productive, in fact, that even though HubSpot, that software and some of the more advanced tools that they were using within HubSpot was costing, let's say, $12,000 to $15,000 a year, they were still able to let go of that second employee. Essentially, with that technology, that one employee was able to do the work of two. And that is a huge boost to the profitability of your tour business. Our next cost-cutting best practice has to do with collaboration with other small businesses in your area to reduce costs. Now, some of the more clever tour operators in our coaching program, one of them partnered with another tour operator to go in on essentially a storefront in a busy part of the downtown area. This allowed both of their tour businesses to get that great visibility and walk up traffic while splitting those costs right down the middle from rent, utilities, insurance, etc. When you are collaborating with other people in your network, you're able to lean into the different resources that each of us have. And by cross-promoting across each of the different companies' social reach, their email lists, and various other channels, you're able to essentially barter and find win-win solutions that save an enormous amount of money on marketing. Our fourth cost-cutting best practice has to do with outsourcing and hiring freelancers. This is an often overlooked cost-cutting strategy, and many tour business owners seem to overlook the fact that we are living in the golden age of outsourcing with freelancer platforms like Fiverr and Upwork available at our fingertips. Never in history have we been able to access global talent pools so effortlessly, where we can easily review their past work. We can read transparent and verified reviews from their past clients, where we can sort those contractors by time zone, by language ability, by rating, and more. Plus, these platforms offer an easy way to transfer funds or pay those contractors while also building in guarantees that go both ways, that you're only going to be paying for that service or for that work once you're satisfied with what they've delivered. So why is it that outsourcing can reduce costs and make your tour business more profitable? Well, here's 5 quick reasons. 1, cheaper labor and cost efficiency. So you're only going to pay for the work that you need, and you can avoid the overhead of full-time staff or the limitations of your local labor market. 2, you get to access specialized skills. You can easily find experts for specialty tasks like marketing, graphic design, website development, translation, copywriting, and often these freelancers will do a better job in a fraction of the time at a fraction of the cost of someone inexperienced on your team, or 9 times out of 10 when you're trying to do it yourself. 3, you have scalability. You can adjust your workforce quickly based on current business demands, meaning scaling up and scaling back, potentially in your shoulder season. 4, increased flexibility where freelancers can do work at any time, sometimes in different time zones, which can speed up project completion. And 5, reduced risk. You can experiment with new ideas and contractors with less commitment via these platforms. To do a better job of identifying what is work that they're doing that is low leverage or not a great use of your time, or in that other framing, it's work that's in the business, it's not working on the business. Just keep in mind something as simple as spending 4 to 5 hours a week doing your own social media or your own email marketing or any number of admin tasks. No matter how great you do that task, there is sort of an upper limit on the return that you can get from that. It is very much an in the business type of strategy. Whereas if you hired somebody or outsourced that or got that off of your plate and you got 5 hours a week back to focus your time and energy on something that is more highly leveraged, like business development, maybe reaching out to a handful of potential partners and securing a new deal that allows you to generate an extra $100,000 in sales over the next year. This is when we can start to use the concept of opportunity cost. What you're doing when you are focused on those types of low leverage tasks is not just the cost associated with your labor, but the opportunity cost. That is preventing you or potentially other business partners from focusing on the business and potentially, what is that opportunity cost? Well, in that example, that's $100,000 a year is what it's costing you to do your own social media marketing. So keep that in mind as we're thinking about outsourcing and getting some support. We're going to round things out with our final 5th cost-cutting best practice, which we've bucketed together as effective financial management. Now, for our purposes today, this is going to refer to three things. One, carefully managing the debt that you're carrying, if you are carrying it. Two, negotiating costs with your suppliers. And three, creating cost-cutting incentives for some of your employees and staff. Now, we're going to go through each one of these things and give some practical examples for this general bucket of effective financial management. The first is, of course, this debt management. Begin by evaluating your current debt situation. If you don't have any debt, then hey, good on you. But many operators probably have some initial investments. Maybe it was to acquire vehicles. Maybe it was to build an aerial park. We want you to carefully look at the interest rates that you're paying across many different forms of debt. Most obviously, if you are carrying credit card interest month after month, there's a good chance that you could consolidate your loans and reduce the amount of interest that you are ultimately paying. Even if it doesn't look like there's solutions available, we highly recommend speaking with the lenders or financial advisors to see what options might be there. Again, don't view this just as a fixed cost. We can renegotiate almost anything. Additionally, you might be able to tap into additional financial solutions or loans that are specific to the tourism sector. This leads into our second category, which is, of course, vendor negotiations. Proactively negotiate with some of your suppliers and venues. Can you secure discounts by maybe ordering in bulk, or if you were paying early? You can do this sometimes with software as a service, where if you know that you're going to be using that software year round, then hey, if I do a one-time payment, you can often save 20%. Hey, wow, that's an extra 20% of that particular cost that you just reduced. You could also think here about some of the things that we do in our personal life, or should do in our personal life, but when it comes to a business expense, we maybe just get a little lazy with. Oh, okay, hey, I just know that my business phone, I charge it to the business. It is what it is. What if you spoke to your telecom provider and said, hey, I want to negotiate, or hey, I've just got this offer from another thing. Can I reduce my mobility bill or my phone bills or various other things by $25, $50 a month? That is a massive amount of savings when you compound that not only over the course of the year, but at the end of the day. Again, it's profit for your business that you as the business owner can decide what you want. Maybe you want that $1,500 a year that you save on your phone to go into your pocket instead of into the pockets of the telco. So be ruthless when you are looking for cost-cutting opportunities. Many of our tour business coaches here at Guest Focus run food tours, and they've had great success in negotiating with suppliers for smaller serving size. If you're running a pizza tour, do we really need to pay for a full slice of pizza if we're going to hit up 5 or 6 places? We can often cut the cost in half by reducing the serving size without dramatically impacting the guest experience. You can do this on multi-day tours as well. Imagine that you're negotiating with accommodation providers. Can we get a comped accommodation for the guide or essentially the host who'll be coming along? If not, you can very often negotiate a highly discounted rate. When I was leading multi-day tours, I was often staying on the far end of the property in not necessarily the nicest rooms, but if that was saving the tour business owner potentially $300 or $400, have at it, right? It didn't impact my ability to do the job. I'm not the end customer here. You can imagine the same sort of things. I remember going in and negotiating with some of our restaurants, say, hey, we're going to be visiting your restaurant 20 times, 50 times over the course of the next season. We would like to have the tour leader's meal comped, something like that. Again, this type of negotiation with suppliers is something that can allow you to discover savings. And finally, that third category in this effective financial management, if you've noticed what we're doing, we're essentially negotiating our contracts on our financial obligations. We're negotiating our contracts with our vendors. And the third bucket really has to do with negotiating contracts with some of our staff and creating incentives for them to help with cost cuttings. So for example, let's say you have an operations manager, and as part of your contract or in their deliverables, you give them a stretch goal. And you said, hey, if you can reduce our operating costs this season by 10% without having a negative impact on our reviews or our guest experience, then there's going to be a financial bonus or a reward to incentivize that person and obviously reward them for helping make your company more profitable. No matter the size of your staff or your guiding team, you want to encourage them and even incentivize them to help come up with cost-saving solutions. This is where the creative juices can start flowing. And it can be something as simple as optimizing your tour routes to save a bit on fuel, to something like, well, let's make sure we always get at least 2 or 3 quotes from competing suppliers before we buy any supplies or equipment. By implementing these cost controlling strategies, as well as all of the best practices that we've outlined here today, you will be well equipped to run a lean, profitable, and fast growing tour businesses. Because remember, as you scale and grow, those efficiencies and that profitability will scale with you. And the reverse is true. If you have a very cost-heavy, low-margin, bloated operation, if you scale that up, you are going to scale that bloat. I hope that you found this video inspirational and that a good reminder that yes, we can increase top line to grow our profits, but sometimes let's say the lowest hanging fruit is right under our noses with cost-saving best practices. So before you go, let me know down below. Let our community know. What are some of your best cost-saving ideas or solutions that you came up with in the past? We'd love to share those best practices here in the community. Now, if you love the idea of having a mentor or a coach or somebody who's gone through this process, who to audit your own tour business and help you identify some of these profit-boosting, cost-saving measures, we'd love to chat. You can go to guestfocus.com/book a call to get a free 45-minute strategy call with one of our tour business coaches. It would be our great pleasure to talk with you and help you find some more profit. If you are here on YouTube, give us a like, give us a subscribe, and like we said, sharing with a friend or colleague really does mean the world to us. Thank you so much for being here, and we'll see you in the next video.